Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I'm Reema Tendulkar, and with me is Nigel D'Souza. And it's a sea of red in the Indian markets as well. So following the rout across the Asian markets and Wall Street overnight. I think Sunil Mittal, the chairman of Bharti Group, is speaking. So let's cut across. He is at the India Mobile Congress right now.
Across the length and breadth of India, there are big projects like BharatNet, the NOFN project, which has been going on for some years. Hundreds of thousands of kilometers of fiber is being laid. Our three companies, Airtel, Jio and Vodafone Idea, have also a lot of fiber. BSNL has a lot of fiber. We need to make this as a national asset and must provide, must carry, regulations must follow to ensure that the fiber, which is very sorely required in India given the lack of fiber so far, and importantly to build the bedrock for the 5G ecosystem, we need to have an arrangement where fiber is now more or less put together as a national asset and available at a regulated charge to all the users, be that the telecom operators or any other operator or provider that needs to access fiber. So I would urge our regulator who is here with us today to take the charge of this particular mission and start to probably come out with a consultation paper or promote a regulation in which the fiber becomes a national asset. Towers, thankfully, were done many years back. We have tower companies in India. My own tower company, Indus Infratel, which is under the process of merger, ATC, and some of the operators who have their own towers also need to look at no more than probably 2 tower companies in India, so that we have 2 viable tower companies providing a lot of coverage and capacity to the needs of the operators. I know the Urban Ministry, Development Ministry struggles to get us right-of-way permissions, siting of towers on rooftops, including government buildings. The reduction of towers will take away the stress of having more towers or building parallel highways on the ground in terms of fiber highways. All this will assist the Ministry of Urban Development Planning to deal with the states for common ducts, for common tower infrastructure, and this to my mind has become very important. The next job that is yet to be done is probably on active infrastructure sharing. As we go towards 5G, you will have the requirement to go probably on a 10x basis of the towers we have today, and that will again require a lot of cooperation and collaboration between the 3 operators to ensure that you have common infrastructures to the extent possible.
Okay, he's talking about how with the advent of 5G, the need for towers is going to go up significantly, and at that time, active sharing will be critical amongst all the operators. But we're right in the midst of the earnings season. Lots of numbers coming out. M&M Financial is a stock which is currently on the radar. Good set of earnings. So this is one stock which has managed to hold up in the green with a gain of 1% in an otherwise very bleak market. It's the strong disbursement growth which has led to the AUM growth, while the higher other income has aided their profitability. Mr. Ramesh Iyer, the Vice Chairman and MD of the company, joins us now. Mr. Iyer, thank you so much for joining in. It's your strong disbursement growth which has driven your loan growth. You have been gaining market share as well. So what kind of penetration has taken place in terms of growing the portfolio?
So if you recall, I have been saying this for long, that we have a very deep penetration, and we in fact added 100 more branches. We also went into another format of branch opening, which is smart branches at dealerships, where we actually are operating out of dealership, getting the inquiry, getting it reviewed or appraised by our field executives, and corner the business. The third format was to reach out to our existing customers who are there in 360,000 villages now, and through them we are generating inquiry in the same villages for growing the business. So I think we have been able to take some of the OEMs into rural market, and the pre-owned vehicle segment has been a very buoyant segment for us. We've grown very well in that segment, as well as in commercial vehicle construction equipment. And here again, we've always been saying that we are not fleet operator financials. We are people who finance less than 5 vehicle buyers and owners. And we do find semi-urban rural market, new set of contractors coming into buying of this. And of course, our prime product like auto products, cars, that is Maruti segment, as well as our tractor segment, have all added to our overall growth. Now, is this sustainable? I think clearly we don't see any competition. There's been too much of talk about many players trying to enter rural market, but that's not been our experience. We don't find them in all these villages where we are present. So if you kind of put the two together in terms of our penetration through different formats, as well as lack of competition and our own existing customer giving us more business from that market, I think put all of this together is what has helped us grow. And we do believe that this is sustainable now, whether it's 25, 30 or 40% is based on how the OEMs sell there. But clearly, we think that we can have a leadership position.
Okay, that point's well taken then, Mr. Iyer. But your net interest margin, that's improved. Now, the liquidity crisis that was seen in the end of September has led to some kind of tightening borrowing for NBFCs. What is the guidance on your NIMs going ahead?
So clearly, Mahindra Finance, historically, you look at for the last 20 years, we've always maintained a very strong ALM match, and we've always adhered to not more than 10-12% of short-term borrowing, which is the permissible limit. And we have used every possible source of borrowing and de-risk ourselves on the liability side. And that's what has helped us, even in this situation, to be stronger at the marketplace. As far as NIMs are concerned, as the borrowing cost has gone up, if you kind of look at our fresh borrowing today, yes, it has gone up anywhere between 60-70 basis point. But we do have a lot of past borrowing, and therefore our average borrowing cost is not substantially moved. But to the extent the borrowing cost has gone up, we have been able to reprice ourselves at the marketplace, though not for all segments and all geography, but we have passed on a small increase also to the consumer. So therefore, the net interest margins are well retained. I think the third element of the net interest margin also, as compared to the past, the NPAs are coming down, and therefore the income reversals are not as high as in the past, and that leaves enough room on the net interest margin side. And put all of this together, you would see improvement in our net interest margin. But if you were to kind of look at 6 months from today, where some of our past borrowings would have matured, the new borrowing will come at 70-80 basis point higher than what it was in the past. And we have plans to absorb some and pass on some to the consumer.
Okay, you spoke about asset quality. Your own asset quality has improved, but that of the housing book has actually deteriorated significantly. If you could give us an outlook on the asset quality of both your overall book as well as for the housing part.
So far as housing is concerned, I think their exposure in Maharashtra was a little large. And as we all know, Maharashtra is going through a little difficult time. We do expect that their quality would correct between November and February, as some of the farm cash flows will come in post-harvest. So clearly, housing will show correction post-November is what we believe, and we've been tracking it very closely. We are conscious and we are in control of the situation. As far as the Mahindra Finance overall book is concerned, normally the first half is not the best half from a rural perspective, whether climatically or economic activity, or even for that matter from the farm cash flow perspective. And historically, if you see in the first half, our NPA goes up and starts declining in the second half. Whereas we've seen in this year, both first and second quarter continue to register decline. And in fact, our gross NPA is as equal to that of March, and net is 0.2% lower than March. So our belief is the problem of quality is far behind us. We don't have anything to really worry about it. And the next 2 quarters, once the harvest money comes in, we would see substantial improvement is our belief. But, it all depends on how the cash flows pan out. But historically, the second half has always been best, and we do hope it to be that way.
Okay, all right. Thanks so much, Mr. Iyer, for joining in and giving us all those details. But on that note, let's cut across to Mr. Kumar Mangalam Birla, speaking at the India Mobile Congress 2018.
Mobile broadband, taking it to 1 billion Indians across the diverse socio-economic and demographic set of consumers. This will enable, as we know, critical services like health, education, banking and governance to become seamlessly accessible to the masses, overcoming physical barriers. I'm equally convinced on the emerging role of wireless broadband for industrial applications, especially the introduction of IoT, artificial intelligence and robotics in our manufacturing setups as well. This, I believe, will give new impetus to the Make in India program, both in terms of improved quality as well as enhanced productivity.
Okay, let's move on. Here's a quick programming reminder. CNBC TV 18 has launched a special initiative in partnership with the National Stock Exchange that on the 25th of every month, we tell you how investing in the stock market or equities makes one financially disciplined. This is a monthly program to inform and educate investors about smart investing and enabling the journey to wealth creation. Catch a special coverage all through the day on CNBC TV 18.
Well, we'll slip into a short break. Up next, we'll get chatting with management of Varun Beverages. Remember, the numbers look quite good. We'll get chatting with Mr. Jaipuria. Stay with us. Welcome back. Then we have, I think, Mr. Mukesh Ambani is all set, to speak at that particular
Honorable Minister.
So let's cut across and hear out Mr.
Shri
Mukesh
Manoj
Ambani.
Sinha ji, Shri Suresh Prabhu ji, Shri Hardeep Puri ji, Secretary Telecom Aruna Sundaram ji, Mr. Sebesalam, my dear friends Sunil and Kumar, Vivek, ladies and gentlemen, a very warm good morning. Friends, today we are living in an India of unprecedented hope and promise. An India that is poised to embrace an immensely exciting future. Just one data point. In my lifetime, I have always been told that India has the largest number of extremely poor people in the world. But in the year 2018, this is no longer the case. Nigeria today has more extremely poor people than India. A World Bank report indicates that India will have fewer than 3% of its population living under extreme poverty by 2021. And as per this report, as many as 271 million people have been liberated from the prison of poverty in the last decade in India alone. This, ladies and gentlemen, is a truly historic achievement. Today, India is among the fastest growing large economies in the world. This has happened due to the combination of force multiplying factors. Most notable among this is the visionary leadership of our Prime Minister, Shri Narendra Modi ji. During the past 5 years, he has galvanized India. He has launched more number of transformative initiatives than in a comparable period anywhere in the world. An equally important factor is the contribution of Indian entrepreneurs, especially those in telecom, IT, and digital space. Never before has India witnessed such an explosion of entrepreneurial spirit. India has moved from the 155th rank in mobile broadband penetration to being #1 nation in mobile data consumption in the world in less than 2 years. Ladies and gentlemen, this is the fastest transition anywhere in the world from 2G, 3G to 4G. By 2020, I believe that India will be a fully 4G country and ready for 5G ahead of other countries. Every phone in India will be 4G enabled and every customer will have access to 4G connectivity. At Jio, we are committed to connecting everyone and everything, everywhere, always at the highest quality and the most affordable price. Friends, what gives me special satisfaction is the silent revolution taking place in rural India. I am personally excited about the promise and prospect of bringing digital revolution to India's villages. to agricultural communities and our rural enterprises, to women and to the marginalized communities everywhere. I am equally excited about connecting millions of small shopkeepers in India. The digital connectivity revolution can transform rural India most comprehensively. In the past 8 months alone, as many as 50 million villagers have got affordable smartphones. For most of them, it is not only their first phone, but also their first radio and music player, their first TV, their first camera, and the first internet in their lives. Imagine what this 5-in-1 small phone means for the aspirational explosion for hundreds of millions of our fellow Indians in villages. And imagine how it can transform India when it becomes 6-in-1, with Indians getting the revolutionary power of their first artificial intelligence services in their hands. And all this only for around 100 rupees a month. This combination of connectivity with affordability is unparalleled anywhere in the world. I would like to acknowledge the contribution of the Government of India, particularly through its BharatNet program, in providing high-quality connectivity in some of the remotest areas of our country. This transformation will accelerate as we get ready for a 5G world, driven by the proactive approach of the government. Today, at the IMC, you can experience 5G and various use cases in all the pavilions. Friends, with Jio GigaFiber, we have now begun an ambitious push in fixed broadband through fiber to the home and premise. Jio is committed to building a deep fiber network across the country and ensuring that every premise is connected with the highest quality network. All of us are proud that India has become the world's largest mobile data consuming nation. Now we have a similar opportunity to replicate this success in the fixed broadband as well. Today, India is at a rank of 135th in the world, and I believe that in a few years' time, we can be in the top 3 in the world in fixed mobile data consumption also. From day one, Jio GigaFiber will offer complete fixed mobile convergence, where Indians will travel seamlessly between mobile and fixed broadband networks, 4G and 5G when on the move, and Wi-Fi when indoors. Friends, we can together create a period of unprecedented growth, empowerment, employment, and prosperity for everyone across our great nation, in a future that will be shaped by the 4th Industrial Revolution, a future founded on the robust pillars of connectivity, computing, and data, a future powered by the path-breaking digital technologies like artificial intelligence, robotics, blockchain, Internet of Things, virtual and augmented reality, a future of exponential growth and immense opportunity for our 130 crore connected Indians. This revolution will open floodgates of limitless possibilities for India and Indians, especially our young Indians. I assure you that our industry will play the role of a catalyst in this mission of propelling our nation towards this bright future. We have to be mindful that data is the most important resource in this new world. and India and Indians will generate humongous amount of data. It is important that we utilize this resource for the benefit of India and Indians with adequate safeguards. With universal connectivity and extreme affordability, our Prime Minister's inspiring vision and idea of ease of living for all Indians can now be realized. With world-class digital infrastructure in place, India is now ready to not only embrace but actually lead the fourth industrial revolution. This is because each one of the 130 crore people of India can now productively participate in this new movement. We can solve the largest unsolved problems facing humanity right here in India. Let me mention only four. First, the fourth industrial revolution can realize the Prime Minister's promise of doubling the income of our 150 million farmers. Second, it can realize the Ayushman Bharat scheme's promise of bringing health care to 500 million people, the largest healthcare insurance initiative in the world. Third, it can bring quality education to 200 million students in Indian schools and colleges. And fourth, and not the least, it can create more jobs with digitally connected and AI-powered marketplace of small merchants and small enterprises, which we call new commerce for a new India. India will demonstrate the greatest digital transformation in people's lives in the world's history. Friends, India will be among the largest digital markets in the world. Every global enterprise must have an India-first vision to participate in this market. We will need to reinvent, to grow, and nurture this market to its full potential. This will be a win-win for the entire industry, for India, and for the entire world. To achieve this, we need a grand coalition of everyone in industry, government, civil society, and citizens. I strongly believe that India will enable every citizen to realize his or her fullest potential on the back of this grand coalition. May God bless our great nation, India. Thank you.
Thank you, sir, for that great articulation of the fact that we have to look after our rural population, we have to alleviate poverty, we must be looking at health, we must be...
Okay, that is Mukesh Ambani saying that with the fourth digital industrial revolution, even the farmers' income can be doubled and India will become the world's largest digital market. We need to slip into a very short break. On the other side, we'll address the markets. Ashwini Gujral and Prakash Gaba join in with their trading picks. Stay tuned. Welcome back. As promised, let's invite Ashwini Gujral and Prakash Gaba on the show to give us a few technical trading ideas. Ashwini, afternoon, what are you recommending?
See, first of all, on the Nifty, 10,100 is looking a little shaky, and the kind of support that was visible here earlier on, I don't think is quite visible, and plus you have expiry, etc. So that can sometimes tend to accentuate the trend. So for the moment, we are short on Nifty, Bank Nifty. Obviously, keep stops. 10,150 is a good stop on Nifty. I think Bank Nifty also you can keep a 100-odd point type of stop because overall so far the market hasn't shown any intention of moving higher. And if this 10,100 is taken out with any conviction, then that kind of opens up bigger declines. Having said that, Titan is a buy with a stop of 780, target of 820. SBI is a sell with a stop of 255, target of 240. And ICICI Bank is a sell with a stop of 320, target of 305.
Okay, all right. Thanks so much for that, Ashwini. Let's go across to Prakash. Prakash, what's the trade on the Nifty from here? And you've got some picks for us as well?
Well,
Well, Nifty, so far it looks weak, but looks like we could hold on to the lower regions. So if 10,000 seems to be a very strong support zone, so I don't think that will breach. May breach 10,100 possible, but I don't think 10,000 will breach. That's not my worry. If you have short puts of 10,000, that perhaps would be a better option than 10,100. I have two stocks, one long, one short. Bajaj Finserv looks like a buy here. Possible target on the upside is in the vicinity of 5,550. Stop below 5,250 should be okay. And Jindal Steel is a sell. Looks like it's coming down to levels closer to 154 zones. Stop below above 165.
Okay, gentlemen, thank you very much for that. Bharat Financial Inclusion is the next stock which is currently on our radar. It's been a good quarter for the company. The numbers look quite good. The stock is down 1.5%, so it's performing in line with the markets. To discuss this, we are now joined by Mr. Rao, the CEO of the company. He joins us on the phone line. Mr. Rao, before we talk about your numbers per se and your outlook for the coming quarter, one risk which is being spoken about is the possibility of over-leveraging of a customer, which could come into play because now Aadhaar-based linkage is gone. Earlier, the Aadhaar-based KYC used to help, and now that that linkage is gone, there is that risk that you could over-leverage a customer. How worried would you be and how would you mitigate it?
There are two impacts. Earlier, we were doing eKYC. Okay, the verification was instant and online. And when the customer applied for a loan, we could instantly get to know what her status is genuineness and so on and so forth. The second aspect is we could instantly go to credit bureau and check her borrowing status. In this case, what will happen is instead of the electronically that we are checking, we will be doing a manual check. So the demand is not going to get anywhere. The loans will get postponed by a week. Instead of a woman getting a loan on the same day, she will get the loan on the next week. So we don't see this impacting the business, except that this week's business will get postponed to next week.
Well, Mr. Rao, is the pace of the strong customer acquisition and robust dispersal growth, is that here to stay? It has been very, very strong in the past 4 to around 5 quarters.
For the last 3-4 years or more, we have been consistently stating one thing, that while the potential for growth is much more than our 40-50% growth, we deliberately are choosing to grow at 40-50% because we think that is where the sustainability of growth is. So that's the first piece. And we also are saying that 40-50% growth that we plan to grow will come out of 25-30% of fresh customers and an incremental increase in ticket size of 10-15% based on the customers graduating from one cycle to the other. So we won't call it frenetic, you could call it in this space especially if you are growing at 80 or 100%. But 40%, 50% is a measured growth because this is not coming only on one single parameter. Either we are just not growing the customer base and increasing the book, nor are we increasing ticket size rampantly to grow the book. There's a mix and match of these things. So 25-30% of fresh customers and 10-15% of ticket size growth. That's the way we are looking at this, yeah.
Okay, Mr. Rao, your net interest margin has improved, but we are now in a rising interest rate environment. Has your cost of borrowing gone up or do you foresee it going up? And in that context, your outlook on margins going ahead?
So as against the RBI guideline of 10%, interest spread, we are at 9.4% currently, right? So we are lower than the 10%. So we still have one headroom for increasing the interest rate, but we don't want to do that unless the cost of borrowings increase significantly. Our marginal cost of borrowing continues to be at 8.7%.
Well, Mr. Rao, the asset turnover has been reducing largely to falling liability duration. Now, how do you see that panning out?
So the liability duration partly has come down to the off-balance sheet borrowings, assignment and stuff like that. But if you look at the liability due ALM gap for 1 year intervals, our maturity is about 6.5 months and while our liability is 8 months. So we are still comfortably placed. We do a lot of, used to do a lot of securitization and assignment. Now it's mostly assignment because of the priority sector needs of our banks, which would want the assets directly on their books.
Bank of India has indicated that it will RBI has opened the window for banks to participate in securitization. Will you look to increase your securitization portfolio or even sustain it at these levels?
The way we look at it is that 70% of our borrowing should be on our books and 30% is on off-balance sheet like securitization and assignment. And this we have been following for the last more than 10 years. We will continue to stick to that plan itself, and we are currently executing the same plan. For example, I think we've recently done some 800-900 crores of securitization with a bank, and we have similar plans to do that in the next 1 or 2 months as well.
All right. Thanks so much, Mr. Rao, for stopping by. Pleasure talking to you as always. But our markets are down close to around 100 points. The Asian markets are trading with some cuts. So let's pull up the European markets. Remember, yesterday the FTSE was a relative outperformer. That ended more or less flattish. But the futures were indicating a sharp downtick to do a bit of a catch-up with what we saw in the US markets. And that's precisely what's happened, actually. The CAC, that's opened up with a cut of only around 0.3%. The FTSE and the DAX, both of them, are opening up with cuts of around 0.8% to around 1%. The FTSE giving back, the relative outperformance that we saw in yesterday's trading session. So let's do one thing, slip into a short break, come back. As promised, we'll get chatting with the management of Varun Beverages. Well, Varun Beverages, that's the next talk on our radar. Remember, the company reported a rather good set of numbers in the third quarter of the calendar year. To discuss this and more, Mr. Ravikant Jaipuria, the chairman of the company, joins us on the show. Hi, Mr. Jaipuria. Thanks so much, sir, for joining in. Well, seems like investors just heard that you're coming on. In fact, the stock has already moved to the high point of the day. Your numbers look quite good, but want a couple of details, particularly on the revenue aspect. If you could break up, this top line for us, how much of it was, from the carbonated division and how much of it was from the non-carbonated division. And also, I think exports are around 25% of your total business. Was there any gain because of the rupee depreciation?
Well, no, it's we don't export anything from here. It's the international market, business, if you are referring to the volumes outside. Our volumes have actually, the revenue has grown by 21% in the third quarter, and the volume has grown by 17.2%, which has been a very robust third quarter. Our EBITDA margins have also grown well with about 14%, and our PAT has actually grown at about 31.3%. So quarter 3 has been reasonably good, like the other 2 quarters. And if you look at our 9-month results, our revenue has grown at about 24.3%.
Right.
Volume has grown at close to 20%. Right. EBITDA has grown by 19.4%.
Mr. Jaipuria, sir, we have all these details with us, sir. We just wanted a few more details from you, what is not already mentioned. Clearly, we have your revenue growth. I'll tell my director, just pull that up for you. Our viewers already know what's your margins as well as the profitability. Let's focus on a couple of aspects then. First, how much of your revenues came in from the carbonated division? How much of it came in from the non-carbonated division? And also, just to rephrase that question, you get close to around 20-25% of your revenues from international markets. Was there any benefit of an Indian rupee depreciation? Go ahead, Mr. Jaipuria.
No, it depends on the quarter. You see, if you the revenue actually every quarter is different because our peak season in India is April to June, second quarter, whereas revenue from the African region, the third quarter is quite important because that's their peak summer which comes. So it differs on every quarter. But overall, if you are, as you are asking, soft drink CSD is close to 80% of our business. 14 to 15% is water, and about 6% is juices.
Okay.
That's the mix of the 100% of the volumes.
You spoke about a 17% volume growth. What is your outlook for the full year? Can you sustain it at mid-teens? And secondly, while your absolute EBITDA has gone up at 14%, the margins are down to 18%. Can your margins recover in the coming quarter? Give us some outlook on the margins.
Well, you see, the margins are slightly down. Only reason has been because Tropicana we are not manufacturing. We've been we are co-packing it, so our margins on Tropicana right now are very low, which we had said in our previous results also. And next year we are planning to put up a plant which is under construction, which will start production by March or April. Okay. That is going to give us the margins which we are getting in our soft drink industry. So that is the reason you see the margin, EBITDA margin, and the new territories which we had acquired. Even though our margins have gone up in that territory, we are still consolidating it, and I think by early next year they will be fully integrated to our original territory. So that margin is also making a little dent on this quarter.
All right, Mr. Jaipuria, very quickly, sir, we're running out of time. You have exposure to North and East. Is there a possibility you can, get some access to other regions, maybe like the South and the West?
Well, as I have said always, that we are always interested. It depends on PepsiCo. They have to make the call if they want to give us more territory, and if and ever they decide, we'll be more than happy to take it.
Okay. Thank you, Mr. Jaipuria, for joining in. That's Varun Beverages. Get into a break. The Nifty hovers around that 10,100 mark. L&T Infotech is the next stock on our radar. Good numbers. Sanjay Jalona, the MD and CEO of the company, has been waiting by patiently. We'll chat with him when we return. Welcome back. Let's focus on L&T Infotech. That's a stock which is on our radar. Good set of numbers. Constant currency revenue growth of 3.5%. There is a margin improvement of more than 130 basis points to 19%. Sanjay Jalona, the MD and CEO of the company, joins us now. Mr. Jalona, thank you very much for patiently waiting by. Your Q1 and Q2 growth was at 13% on a year-on-year basis. Will you be able to sustain this kind of a momentum and end the year with a 20% plus kind of a revenue growth?
Leadership quadrant means, you want to be the leader. And I've always said leadership quadrant, or if not the leader. We had a good growth. We had a 10% year before. Last year, we did around 17%. And where I sit today, obviously, leaders quadrant is important. But I think we'll beat probably the growth in that we have given in that we did in FY18 as well, which was 17%.
Well, Mr. Jalona, the BFSI growth is subdued in the past quarter. What was the reason for that? Can we expect a bit of a recovery in the coming quarter?
BFS actually had a very strong first two quarters. This quarter, very strong last two quarters. Even Q1 for this year was very strong. We continue to be, and if you look at this quarter also, while the constant currency growth was, very, very marginal, on a year-to-year basis, it's upward of 33% growth, right? So we are confident about BFS overall. We believe it will bounce back in subsequent quarters, and actually it will be higher than the company growth for the yearly.
Okay. Your margins have improved by 130 basis points, and this is despite a wage hike, which would have negatively impacted at the operational line. If you could tell us what led to the margin improvement?
So margin improvement was driven with 190 basis points coming from currency benefits. With US dollar strengthening, there was 140 basis points negative because of the wage hike. There was also a positive of around 60 basis points because we did not have to spend on visa expenses. And obviously when you do the calculations, the rest of it came from efficiency gains across many levers.
All right, thanks so much, Mr. Jalona, for talking to us here on CNBC TV 18. Well, the stock you should focus on is Jubilant Food. That one's down close to around 10%. Let's do one thing, slip into a short break, come back. We'll try to tell you what the management said on its con call. Stay with us. Well, Jubilant Food is now at the low point of the day despite an in-line set of numbers. The management says that they saw higher competitive intensity, which resulted in some cost pressures during the past quarter. At brokerages, in turn, they've cut the target price on the stock. Let's hear out what Mr. Pratik Pota, the CEO and whole-time director of the company, had to say on the earnings con call.
Store expansion is picking up momentum now, and as stated earlier, we are well on track to open around 75 restaurants by the end of FY19. In Dunkin' Donuts, we closed 5 stores, thereby taking the store count to 32 restaurants across 10 cities. One significant feature of the quarter just gone by was the increase in competitive intensity and the surge in demand for delivery manpower, driven by food aggregators and e-commerce players. We did well to deal with this challenge by stepping up both our retention and indeed our hiring efforts. This, however, resulted in some cost pressures during the quarter. We expect this pressure to continue in the near term and are hopeful of mitigating it through various other cost-saving initiatives.
Okay, that's about Jubilant Food work, but PVR's Q2 numbers are flashing on your screen, at least in terms of the top line at over 700 crore. This is looking better than what the street was anticipating. The bottom line, however, has come in at 33 crore. So that's a miss of about 2 odd crore. So revenue number is looking higher than our expectation, and even the EBITDA at 124 crore, this is looking, at least on an absolute basis, slightly ahead of what the street expectation was, and it would put the EBIT margins at close to about 17.5%, so higher than our expectation by 60 basis points. We'll try and understand what transpired in the bottom line to result in an in-line or slightly lower. But net operationally, PVR has delivered a good set of numbers, a slight beat on the revenues and on the margins compared to street expectations. With that, it's a wrap on this show. Business Lunch will take the market action forward.